Hello there, I'm Josh, and this is Blake, right?
Well, apparently, my wife's not sure after I went and got my hair sheared and
Yes.
got cleaned up after Christmas.
Yes, you look
This
good after
this
your
this
eight
is the
dollar
2020 Blake.
you look good after your $8 haircut.
Well, thank you, sir.
All right. And this is our bi-weekly, more intense look at the market and some more critical questions that'll impact clients, as this only goes to clients here. And so let's kind of get right to this here on the first question. Here we are, midway through the winter in Wisconsin, January 10th. I was out running 2 weeks ago in a t-shirt and shorts, and now we got some colder weather coming. Markets are lower. Where do you see the market heading now in this last half of winter from your vantage point, Blake?
Well, as a lot of people know, I mean, they've seen our weeklies and seen our commentary. I mean, you've got higher production, you've got higher inventories, and there's been a general absence of winter. The interesting thing is, if you go back and look at last winter versus this winter, our withdrawals out of storage have been tracking pretty close to each other. Now, the big question is upcoming, because if you go back to last winter, winter didn't actually start until mid-January. And if you look at the chart, you can see a very deep drop in inventories, looking at the size of the weekly withdrawals. If we can't match those withdrawals, if inventory surplus continues to build, there's going to be continued pressure to keep gas down around $2 or maybe even break through the $2 barrier. But as we're already seeing, I mean, Wednesday next week, we're looking at temperatures in the teens with overnights in the single digits and colder upstate. Now, one of the things that always comes into question with those kind of weather patterns is how deep into the country they go, because the deeper they go into the country, that's where you get the very sizable withdrawals. In one of the periods I remember most, December 27th, 29th of 1989, polar vortex came in and gas was freezing on offshore platforms, offshore Louisiana. I don't think anybody's forecasting that right now, but if we don't get cold weather in the near term, the front prices are continue to be deeply depressed.
Hmm. Okay, this will be interesting how this then plays out over the next 2 weeks with the storage report and how cold is it possibly going to get here. So
Yeah, I mean, the interesting thing is, I mean, if you go back and look at the forecast coming out of the National Weather Service, I mean, they were calling for January, February in the upper Midwest to be well below normal last fall. And they confirmed that in November when we decided, we wanted to address that weather risk by advising some hedging.
mm-hmm.
And as I looked at weather in recent weeks, AccuWeather and other weather services have come and mimicked the forecast of the Weather Service that we're supposed to get cold weather. But the fact is, right now, we haven't seen that really cold winter weather. So if it shows up, we may get some strengthening in pricing. If it doesn't, the front is going to continue to be depressed.
Okay. So let's shift gears here a little bit. Last month, the PSC here in Wisconsin ruled on the WEC hearing, which you and others in our company intervened on for several months. So we've got some information in when it comes to the rates and a few different things like that, but there's a little bit of the verdict out here. So from what you know today, what do the rates mean for people that are our clients right now in anticipation of the next RFP or the next year? Where's this at?
Well, there were actually several different cases pending before the commission. Uh, the one which they filed in February was to change the tariff language. A couple of months after that, they filed a separate proceeding to change rates. It's actually in that second proceeding, the rate case, as they call it, that we now have verifiable results. As required, the utilities implemented their new rates on January 1 of 2020, and we have those rates in hand. Interesting enough, if you look at the 2020 rates, they're actually advantageous to people transporting gas. Still kind of scratching my head on that. Basically, the utilities increased the cost that is applied to their own gas, which makes transportation gas a cheaper proposition. And you'd be able to look at the table. We've done the rates for Wisconsin Gas, Wisconsin Electric, and Pub Service. And in all three utilities, there's an advantage to being on transport.
Okay, so kind of a we didn't expect it, but
No,
there you go.
I mean that was definitely an unexpected result. And trying to judge these rate cases are so complex, the cost of service studies are so complex that trying to figure out where things are actually going to fall out, sometimes you just have to wait for them to fall out.
Okay, so on the rates are published; those are known facts. So what's the unknown commodity right now that gives you some anxiety here?
I mean, the unknown continues to be the new rules, the changes that the utilities asked for in the gas tariff changes. And in fact, that is what we spent a good part of our Christmas holiday working on. What, excuse me, was a request for rehearing, because we quite frankly believe the commission got it all wrong, or almost all wrong. They didn't do much right. They didn't do any kind of analysis. They didn't do any economics. Basically, they divided the state up from, a universal Wisconsin where all customers participated in a pool, and divided into 14 different pools, but they never required the utilities to actually tell us about those pools. What size are they? What kind of gas usage is in those pools? So, it is our firm belief, and as we talk with suppliers, this belief is reinforced, that some people in some of these rural areas simply will not be able to get affordable gas transportation. Gas. It's, once again, we've appealed and we have not heard anything out of the commission, but the commission got it wrong. So, and to talk about pools, for instance, and some people may question that. Well, if you look at like Milwaukee, Milwaukee, there's probably close to 1,000 companies in Milwaukee that utilize gas transportation. Well, when you talk about pool, it allows suppliers to take those 1,000 and basically aggregate them together. So if you're trying to stay in balance with the utility in Milwaukee, you may be looking at a pool, say, of 1 million therms a day. Well, 1 million therms a day means you've got a tolerance of 50,000 therms. And for most suppliers, working with those kind of tolerances is pretty straightforward. That's what they're designed to do. But you go out to a rural area, and maybe there's only one company out there that's on transportation, and maybe he's burning 1,000 therms a day. Well, that 5% tolerance is 50 therms. And with variances in weather and temperature and wind and moisture, it's virtually impossible to get that customer within that 50 therm tolerance band. So, that's the threat of what happened with allowing all these new pools. It's quite possible that in some of these rural areas that transportation service is not going to be feasible.
So basically, the risk found in that variance is going to have to be absorbed. The supplier is going to push that back onto a transport customer, and you don't exactly know what it's going to be, and that could create enough right there to push someone out of a program, basically.
Well, and it's really a double-edged sword, because you have the question of the pools, but the second thing that the tariff change provisions did was it changed how imbalanced gas is priced. Previously, all gas in Wisconsin that was balanced through the utilities balanced off the prices published for Chicago. Well, now the utilities have convinced the commission to allow multiple indexes. And some of these indexes simply are not rational. When you have a pool near Milwaukee that can utilize a Northern Natural Index, which is the western side of the state, and yeah, there's some connectivity, and maybe on a peak day, 1% of gas in the Milwaukee area may originate from Northern Natural, but that price should not drive pricing in that market. Also, the commission allowed for certain of these pools to utilize the Oklahoma price for Natural Gas Pipeline Company of America. Well, Oklahoma is actually a production area. That's where they produce shale gas. Often gas prices in that area can be $1 or more lower than Chicago because there's too much gas in that area. And oh, by the way, it's a 1,000-mile ride on an interstate pipeline to get here, which those costs have to be paid to bring it here, and those are not taken into account. So, you've got potential for pricing that is punitive to gas suppliers. And quite frankly, in conversation with the gas suppliers, to put it in their words, they're saying they will not wear that risk again. So if you're in one of those areas, and We Energy still hasn't told us which customers are in which areas, so these are things we're still trying to work out. If you're in one of those areas, again, even though the rate cases resulted in some advantageous pricing, the risks associated with what the commission allowed the utilities to do in the tariff change filing may outweigh everything else. And we may have to advise you to go back to the utility because you may not find anybody to serve you, or the cost of that service may be too high.
So let's wrap this thing up on a positive note here. There's a lot of negative energy of like, oh my gosh, this guy's
let's talk Iran then.
Right,
yeah, let's be positive about something.
Right. So I mean, we're obviously monitoring this closely. We're talking to suppliers. We've seen some positive things when it comes to the tariff rates themselves. We are in a low price environment as well. I mean, there's still going to be a lot of good opportunity going forward for most people.
Well, we'll see. I'm not ready to jump on that wagon.
Okay.
I mean, low prices may not stick around. CapEx budgets are getting slashed because people can't make money on $2 or sub $2 gas.
Mm-hmm.
So, we can't always count on being in a low price environment.
Yeah, that element to it. I understand.
So, it's the natural gas is dynamic, and things here in Wisconsin are dynamic, and I have to think that's why customers hire us to help them, because it's a muddle, and right now it's a particularly big muddle with all these changes and a lot of information that's not known. But we are working I had conversations with suppliers yesterday, and since We Energy has not even published the tariff pages, nobody actually knows what the rules are. So everyone's kind of waiting for the utilities to actually put their tariff pages out there so we can take a look at them and say, oh yeah, now we know this is exactly what's going to happen, and we can start to try to maybe analyze it. But we're not even to that stage because we don't have the tariff pages.
Yeah. So I think I'll probably wrap it up in this way: is like, we are, for people that are watching this at ours, extremely proactive and involved in this matter.
Yes.
To your benefactor, and we spend a lot of time and energy discussing this as a group of what's to the betterment of our clients and not us. So it doesn't do us any good if people lose money and things like that. So the point is, it's always directed towards you guys to use a term out of finances, as fiduciary as possible.
Yes.
So, well, let's wrap it up. Put it there. We'll talk here in another couple of weeks. For myself and for Mr. Blake here, you guys have yourself a great week ahead. Take care.